Hello folks, good morning. So this is an update on our top-down analysis, the one we did on Sunday at the beginning of the week. All right, so we were anticipating that the dollar was going to trade bearish, and we were hoping that should the dollar trade below that previously created low right here, we would like to see a return into the range. All right, once we see the body of the candle close below that low, that will be a shift of market structure. And once this guy trades back into the range, the breaker, the supposed breaker that should have been created, or the fair value gap around that level, will start to short the dollar while we're buying foreign currency. But I'm seeing something very interesting as well. Remember, in the lesson where I taught you guys on how to use institutional reference point, or simply put PDRs, you would remember that the last of the 7 institutional reference point is an old high or old low. So currently we see the dollar sitting on an old high. You can see those highs that were created, relative equal highs that were traded through by price action. Price is finding support at that level. So this looks like resistance turn support. All right, and it's a powerful key level for price action to hold. All right, so I'm looking at price. Once we see a shift of market structure on the 1 hour time frame, I like to see this guy trade above the buy side liquidity pool residing above here and trade into those other levels, like as you can see me outlined right here. You can see this was a previous support that was broken. Okay, we'd like to see the dollar trade back to this level, and ultimately this level also filling up the monthly sell side imbalance, buy side inefficiency. This is also signifying the volume imbalance of the monthly time frame around the bearish order block of the monthly time frame. So it looks to me like the drawn liquidity is currently bullish on the dollar, but should anything change, I'm going to keep you updated on my anticipations on the dollar. And again, I can see something that looks like a smart money divergence. You can see right here the dollar has failed to form lower low, while we see the pound dollar formed a higher high. All right, so let's quickly take a look at the 1 hour time frame. Let's see what we can find on the 1 hour time frame. So at the beginning of the week, I was short on the dollar at this level, the fair value gap right here. Okay, look at what happened as price opened on Monday. This was the Friday opening gap. Sorry, this was the Sunday opening gap. So as price opened going into Monday, we had the dollar trade up into the previous fair value gap that was left unattended to at this level right here. This was a bearish breaker. You can see that the shift of market structure lower. Price traded back into that fair value gap and then gave us an entry signature. What was the entry signature? We had a new shift of market structure at that level that created a fair value gap and an institutional order flow entry drill signature. All right, you can see fair value gap with an old wick in between that and IOFED. Just like I taught in the previous videos on the channel. If you haven't watched that video, kindly go to the video on the channel and watch the video where I taught institutional order flow entry drill, and you can as well watch the 7 institutional reference points. So I was short on the dollar at that level. Remember, we're not chasing price, we're waiting for price to create our most preferred signature for entry, and we execute at that level. So I was short on the dollar and I was buying the pound dollar. Okay, this is relatively 1:3. all right, and this, I think this is quite a very good risk for price action. So currently we can see that the dollar has failed to take out that low and is looking like it's finding support at that level. You can see it's finding support, found support for the first time, created a swing low, found support for the second time, created a swing low, and also a bullish order block on the 1 hour time frame. Right here, price has traded back into that bullish order block and it's looking like it's finding its way to the upside. So we like to see this guy we'd like to see a clear shift of market structure on the 1 hour. Should it clear the highs above here, that will confirm that we have a shift of market structure, because this looks to me like a failure swing. Once we have a shift of market structure above this level or this level, then we would like to buy the dollar and short the pound dollar. Alright, so let's quickly look at GBPUSD, and let me show you the smart money divergence I've been able to identify between the dollar and the pound dollar. So this is the pound dollar daily time frame. You could see that price had taken out the previous high on the pound dollar right here. Price had traded above that high, while the dollar has formed to clear the lows of the daily time frame. So this looks to me like smart money divergence, price forming higher low while this guy is forming higher high. That is smart money divergence. So we'd like to see more confirmations on the lower time frame, the 1 hour time frame. Once it gives us a shift of market structure bearish, we'd like to short GBPUSD while we are buying the dollar into the drawn liquidity that we outlined on the daily time frame. So this is the pound dollar. You could see that price traded into a fair value gap with an old wick in between. This looks like institutional order flow entry drill. More confirmations will come when we see a shift of market structure on the 1 hour time frame, and we may short this guy below that low again, and also into the sell side liquidity pool residing here, or better still into a deep discount level. But this will be the drawn liquidity, the sell side liquidity pool residing here, especially because it has a fair value gap right below it. That's a hack for identifying drawn liquidity, simply identifying where the sell side liquidity pool is with a fair value gap or imbalance residing just below those levels. So this looks to me like the next draw on liquidity. So guys, let's simply go to the 1 hour time frame to see what we can find on the pound dollar. So this is the 1 hour time frame. All right, price has cleared yesterday's high. We'd like to see if this guy trades below the lows here. Once that happens, then we'd like to go short on this gap. This is also a bearish order block just created. Should it be respected, then sorry guys, so guys, that's my expectation for the dollar and the foreign currency this morning. Make sure you stay safe in your trading today, because we have the CPI coming up today, or FOMC today. We have FOMC meeting minutes coming up by 7 p.m. GMT+1. Let me quickly show you on the economic calendar. And usually in a day like this, we don't want to be caught in the marketplace, because the market is going to impose speed in price delivery, and if you are wrong in your market analysis, you may cry to your mistakes. So you do not have to put your emotions under such market conditions. All right, so we have FOMC meeting minutes by 7 p.m. GMT+1 on the dollar. You can see around 1:30 p.m. we still have the core PPI and the PPI on the dollar also. That's a high impact news. So today is going to impose such a fast, speedy price action. So you have to stay safe and be careful. Make sure you like the video, comment in the comment section, let me know how you feel about these videos, and let me know what video you would like to learn on this channel. And don't forget to subscribe to this channel. Until next time, I wish you good luck, good trading, stay safe.